Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today. Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be looking at a little bit of price action early in the session. Now, typically, we come on a little bit later, but today, I wanted to get in on what I think is going to be some pretty good trading. So what we're going to do is we're going to dial up a few ideas. We're going to see about that 15-minute 2-bar orb. I want to run that on the U.S. 500 here momentarily once our bar sets up. And then, okay, there we have it. So let's go ahead and get to a price action here, and then we'll circle back around and take care of the formalities. But 2-bar orb, we're doing a live workshop that's going to be on Thursday. I'm going to tell you all about this strategy if you don't already know, but this essentially is what it is. 2-bar orb right after the opening range breakout strategy. There's bar 1, opening bell, ding, ding. There's bar 2. Interesting, sort of a leg up today after a negative Monday session that really had to do with more, I would call it renewed hostilities in the Strait of Hormuz. Big news, though. Big news just broke about, 10, 15 minutes ago. There's a lot to talk about with are we going to end the ceasefire or aren't we? I think just by looking at this U.S. 500, there is a lot of angst and a lot of really positive sentiment regarding potentially the ceasefire continuing, even though we had a kinetic exchange yesterday between Iranian and U.S. forces. So I did want to get started with this orb. Remember, we've got a live trading webinar. It's going to be Thursday exclusively on the Switch Markets YouTube channel. Be sure to check that one out. You're going to be able to, ask me any questions you want about the orb, and we're going to execute some trades in real time as well. So this right here is going to be sort of the beginning of what I would call not necessarily strategy months, but we're going to be talking a lot more about how to actually get in here and trade. We've been talking a lot of news, but each and every week we're going to be doing a live webinar from here on in, at least through the summer months, because we had some pretty good feedback on the last few that we've done. I sort of got away from them for a few weeks, but now we're going to bring those live webinars back into play. Even though they may not be for everybody, they're a great place where you can ask questions and get squared away with potentially a strategy that you may need to get started in the markets. Strategy is a great place to begin. Everybody needs one, and if you can develop one that works for you, then you have a major leg up on the competition. So good to see everybody back in the room. You can see our orb. We are pushing a little bit higher. U.S. 500 is up about 0.75%. U.S. 100 is the big winner thus far, up about 1.25%, and that's sort of the par for the course. That's definitely par for the course. We've watched the U.S. 100 pretty much be the leader of the pack this year. The AI boom's in full swing. A lot of folks believe that maybe the Iran war was going to be the end of the AI boom, and that hasn't really happened. We've seen the U.S. 100 higher and higher and higher each and every day. So we're going to go ahead and let that orb simmer there on the U.S. 500. We've got a lot of other markets to look at. We've got some news events and also any questions that you may have. I'm more than happy to answer. So good to see everybody back out there in YouTube land. Lewis, good to see you, Lewis. Welcome. Destiny John, good day. Good day. Good morning, good evening, good afternoon, wherever you may be in this fine world. Kelvin, always a pleasure. Kelvin, Tina Jing. How's it going, Tina? Going very well on my end. I cannot complain. A little bit early today, but that's okay. Let me see. Tina, do we have time to look at cocoa? Any chance to buy for a good price, please? Yeah, cocoa. I mean, that's an interesting one. I don't know that we've ever looked at cocoa on one of these live streams, but if you have a specific symbol you want to look at, drop it in that live chat, Tina, and that'll save me a little bit of time when we run it through TradingView, or else we can just look for a cash CFD or something on cocoa. But yeah, good market. I love ags. I don't cover agricultural markets very often because a lot of folks are trading their Forex pairs, they're trading stocks, they're trading commodities. I really like eggs, that's for sure. Pack up paper trading today. Yeah, we're going to do some trades. We've got that 15-minute orb brewing. We're going to look at some Forex prices and potentially maybe trade some gold futures as well. A little bit of action in gold rallying up above that 4,500 threshold. So we've got an opportunity to trade a lot of different things. If you have any suggestions or any markets you want to look at, like Tina just did, drop them in the live chat. We'll be sure to get to them. Out there in YouTube land, good to see everybody in our How to Trade community. Andrea Garwal, always a pleasure. Andrea Tuku, good to see you, Tuku. Welcome. All right, so we're set up with our 15-minute orb. Let's go ahead and see if we can find something to get after right this minute. You can see what we have developing here on the gold market is interesting. You know, I'm relatively confident that you're going to see that sell-off develop underneath April's lows. Hasn't happened yet. Hasn't happened yet. We came off a little bit, sort of tested the waters beneath that real tight, compressed April, and now we're rallying. It's turning into a failed auction down there. And that typically, we're going to give it another day or two, but if that happens, a lot of times when you just see a few ticks or maybe just $1 or $2 when the ranges are this big and then a market reversal, it can absolutely be it could be a complete banger. I mean, it could be a complete change of market direction. I'm always watching for failed auctions. This doesn't quite qualify just yet because this is a monthly chart. But when we're looking at something like a gold, we've got to be dialed in because if this market reverses, we don't want to get caught short. For me, I like the support levels. I put these out sort of in our weekly newsletter and also the market analytics video. We've got some interesting stuff developing with regards to price action. It's just flat. And I think we're going to get a move this month. I think. But I'm pretty sure that we're going to get a move out of gold at some point in May. I think that's a safe bet. But right now it's already the 5th day of May and nothing's really shaking and the gold market's still very flat. I like support if we reach a level of disequilibrium down there at about 44.30-ish, 44.32-ish. I really like that area of support. Also our 13-month EMA is one to look at for this month as well, 41.62. That's a significant move from where we're at right now, about $400. So I'd be watching that closely as well. And then support way down the queue. Maybe if the world really changes, we'll get an opportunity to bid that monthly 62%. I think those are all bids. I think those are all viable trades and ones that we probably should be looking at. Okay, that's a long-term look. Let's take this right down to a 30-minute chart and see what's happening with our current gold market dynamic. Now, TPO charts, I would not put them to work on on an OTC market like the XEO USD spot gold. I wouldn't do it. The volumes, they're not good enough. So remember, TPO charts, it's all about volume. We'll circle back around to that maybe a little bit later in the week. But what we have developing right here in gold is just sort of an up day. Nice big break starting at about 7 a.m. Eastern. Sort of a rally, compression. Really an according to Hoyle uptrend. If you're looking at the U.S. session exclusively, right in here is the opening bell ding ding. Then you sort of got a real tight area right there. So what can we really do here? Well, we can do a lot of things. For me, gold always starts before the market. I'm always looking to start gold, typically with my trading day right in here somewhere. But 5 a.m., you can see that's when we got our first big move, 5 a.m. my time. Now we're rallying. So for me, I'm looking to get in here and potentially buy a pullback. I like the price action, the way things have developed here today. You've got a nice uptrend. Pretty good market symmetry, sort of a little bit of a sweep right there that sort of broke our uptrend symmetry per se, but we still are grinding higher. I would take a look at that entire range, somewhere right around 45.67. That's not a bad area, but you'll notice, I mean, this has been the deal with intraday gold and gold across the board. We run and then we rotate, and we've really slowed down here. We've really slowed down. Early March was crazy. February was good for gold. Just wild market action. Late January was great. And now we've really started to get into that compression pattern that we saw pretty much the entire way last summer. So we're not there yet. I'm not willing to call this market dead forever. I do believe we're going to get a move, but this is exactly what's happened. You're getting these runs, and now we're rotating. Two very tight 30-minute bars. So what can we really do to align ourselves with the pressure? You know, the bidders are there. I'm thinking that we're going to buy pullbacks. 38%, probably a pretty good scalp for us. So if we were going to execute this trade, I would be going right over to my paper trader. Remember, everything I do on here is paper. I'm not a signal provider or a financial advisor. I'm not going to give you investment advice or anything of that nature, but I can show you how to execute trades. Looking right in here somewhere, probably right around that area right there, 38%. And that's going to be your buy limit order. And you just want to be waiting there potentially to get an entry if we do get a pullback. Very, very tight trade, though. We're not going to sit around and wait for this thing to make a decision to move $50 higher or something like that. We're in and we're out. We're looking for a nice tight scalp with the pressure. And one of the things about Fibonacci's is if this market does move higher like it is right this minute, we're going to have to readjust our entry points. So that's sort of a good look at how I would be looking to trade this market this early in the session. Great time to be trading gold. A lot of price action there, and I think you're going to get an opportunity potentially to make a few trades. So we'll watch that closely. Let's get on out to gold futures. This is one of my favorites. I like the futures contracts for a lot of reasons. Number one, they're exchange traded, so I know exactly what the volumes are, what exactly the volumes look like. So for me, it's very obvious pretty much when to start your trading day. It's when the volume picks up. Typically, that's going to be right around 8 a.m. Eastern, 6 a.m. my time out here. I'm in the Mountain Time Zone, and you can see that really is what I care about. Now, we went a little bit bigger. We used the entire range on that spot gold. There's nothing wrong with that. Absolutely nothing wrong with that. But for me, I want to get involved right when the volume kicks off. And typically, that's about an hour and a half, about 90 minutes before that U.S. Open, that Wall Street Open. So right here, we're looking at the market saying, okay, what can we really do to develop a trade? It'd be the same basic game plan. Nothing really too fancy about it. However, we can incorporate TPO charts, time price offering charts, which do give us a good idea of where the volume's been. Now, a little bit, I don't know that necessarily that these are, we could say a lot of things about TPO charts. And I always just look at it sort of in the aggregate. I'm always looking to see where that point of control is. You can see it's colored a little bit different. But right in there is where we've done a majority of our business during that overnight. And that's really going to set us up for potentially pullback buys, maybe rotation, something of that nature. So for me, when I'm looking at this gold chart with a TPO, time price offering, which essentially is a market profile, all I'm looking for is the volume distribution. Think of TPO charts essentially as just the volume indicator turned on its side. You're just judging volume instead of time period. You're judging it at price point. In many ways, I like that better than time period. But you can see right here, we're building an interesting dynamic here. In this gold market, we're looking for potentially a nice pullback bid here. Probably right from your point of control, be right around 45.63. So we still could use our Fibonacci's with the TPO charts as well and just try to build as strong of case to buy this thing as we possibly can. Somewhere right down in there is probably your better entry. I still think we can get away with scalping 38% up there, but we just got to wait and see if this develops. TPO charts early in the day for me are not that great. I like to use them later in the day, maybe in about 3 hours or so when we usually do our live streams. That gives us a much better opportunity to see sort of the dispersion, the distribution of volume, traded volumes. That's big. That's always been a big deal to me. I really do like TPO charts. Maybe we'll do some tutorials or something on it, but get a lot of questions on those. So I'm more than happy to dive into there. So that's sort of our trade on the board right there for gold. Let's see. Pack up, good to see you. Let's see. Happy Cinco de Mayo. Yeah, it is a Cinco de Mayo, Jason Max, and I think most people, depends on where your location is. A lot of folks are headed to the bar, probably early today, going to get some chips and salsa, maybe a couple of cervezas. For me personally, it's a work day and a school night, so I'm not going to be celebrating Cinco de Mayo, but I had a fun Kentucky Derby day. That was nice. But if you guys are celebrating today, enjoy it. Big holiday. I remember when I was young and in college, man, Cinco de Mayo was a big one. So if you're going to celebrate, do it safely and enjoy yourselves. Remember, the markets will always be there. If you have a long night tonight because of Cinco de Mayo, you don't have to trade tomorrow. Come back Thursday, come back Friday, and be ready to rock and roll. Okay, let's go ahead and take a look at that cocoa contract that Tina would like to look at. You can see right here, looks like we are going to get our breakout here in about 2.5 minutes on our US 500, so we are going to execute that. Let me make sure that we've got our paper trader up and ready to roll. Okay, right there, and we're going to dial this in. I'm going to show you exactly how to execute this orb strategy, and then we're going to go ahead and let it roll and see how it goes. 2 minutes until this sets up. Remember, if we get a bar close outside of our opening range, then it's on, and we're going to go ahead and take a shot at it. Okay, let's see. We've got gold here. Let's go ahead and look for cocoa. I've got some Forex pairs that I want to look at as well. I want to execute that gold trade, though. That would be a fun one. Cocoa. Or we've got Cocoa Cash contract from Pepperstone. Let's go ahead and just give that a roll and see what we're looking at. So Essentially, you've got an uptrend, intraday uptrend. Let's go back to maybe a daily here and take a good look. Okay, so we've got a breakout. Tina, I can already see why you were looking at this market, because it's a mover and a shaker. You see right there 5% today. I mean, that's a massive move. My guess is a lot of the cocoa is probably you're dealing with supply chain issues. You're going to see a lot of this across the ag markets. Just because of what's going on in the Persian Gulf right now. So a lot of folks are going to be looking at this area, sort of I would say a technical zone where you said, well, is it a demand zone? Really? No, not really. You can see big time sell-off here, compression, and then a break. Why the compression in this zone? Why? More than likely, it's a key level. Let's go ahead and put a horizontal line out there. Perhaps 4,500 may be the ticket. Let's go ahead and go with it and see where it falls. Not really. You can see that, okay, we broke beneath 4,500. Now we retraced, and that area is now topside resistance. So if I was trading cocoa right now, I would be looking to hold longs, get long, or hold longs. And if we can get that accomplished, then we're going to have a pretty good entry. Pretty good market entry. So right here, I'll break this down for you in just a second. Let's get back on over to our orb with 29 seconds left. Okay, our orb completely reversed away from us. Now we're back down into our range, and it doesn't look to me like we're going to get an entry here, which is kind of a bummer. I wanted that entry right now. We're not going to get it. 17, 16, 15, 14, 13, 12. So we'll have to wait at least a minimum of another 15 minutes before we can get into this trade. And the reason why is we've got to close outside of our range. That is absolutely a huge filter for the orb. You can't hurry into an orb. You've got to wait. Opening range breakout, you have got to wait until you get a close either above or below that orb. So right now, this trade is sort of off the books, at least for the next 14 minutes and 45 seconds. So we'll come back, circle back around to that orb setup. As far as what we have cooking here in cocoa, interesting. So the first thing I would be looking at here, Tina, is, okay, I know that's a big trend. Boom, and then we sort of retraced, and now we're bouncing. So if we want to hold longs from right here, I don't hate it. I think you're probably going to get a run right up into this value area that was established somewhere between 40, 42.50, and 45. I wouldn't have a problem with that idea and that trade management concept. However, if I wanted to get out in front of these markets and have a level to hang my hat on for the rest of the day, then maybe I would look at my macro trend and then look to dive in there and see if any of my Fibonacci resistance zones line up with 4,500. If they do, then my sell is sort of self-evident. And I'm looking at this thinking it's pretty close to 38%, relatively close, maybe just the other side of it. So let's go ahead and step back to maybe a weekly or a monthly chart and see if we can identify a macro trend. Okay, there it is. Bigger than life right there, sort of this spike high right in this area. Let's go ahead and get our Fibonacci retracement tool, spike high to a spike low, and that's almost like a magic trick. 38%, 41.86. That's going to be a big deal. I would view that as maybe a nice little scalping zone against today's pressure. Tight risk controls, though. Not messing around with it. Not going to let it bleed against me. If it works, it works. If it's great. If it doesn't, that's fine, too. I'm getting out. But somewhere right around 45 coincides with the 50% level. I don't love it. I just don't. I think that that's probably going to be an area where more than likely you're going to get on the wrong side of maybe a bullish breakout. I would stay away from that. If you wanted to scalp 4,500 and maybe use 46.50 to the short as a stop loss, okay, I don't hate it, but just be very, very careful with your risk because we're just banging higher right now. We're up almost 14% this week. That's a stiff trend, no doubt about it. So my entry point by this chart, where would it be? Right up here. I would much rather be looking at about 5,000 as a potential resistance zone. Great level. 62% of the daily, 5,020, 5,000 even. Absolutely fantastic. So that could be a great area where we could step up and sell the market and feel very confident about what we're doing. Right now, though, I wouldn't be messing around with cocoa to the short without tight risk controls. That is a bullish trend. Boom, nice break. And then we rally even higher. I mean, even if you wanted to buy, just put your Fibonacci's to work on the short time frame, this 30-minute time frame. You could do something like that and just look to buy a pullback, 4,077. It's a robust market right now, no question. The uptrend is there. I like it, at least testing this 38% to the top side, but we'll just have to wait and see exactly how it pans out. More than likely, the fertilizer issues that are stemming from the war in Iran are impacting a lot of ags, and clearly cocoa is no exception. Cocoa's no exception. So I hope that helps you out a little bit, Tina. I think that's a pretty good market to be trading, though. It is alive. So just whatever you do, if you're going to go short, make sure that you have tight risk controls and you don't get caught in an extension. A lot of people believe that, the markets can't go up forever. Always remember that saying. The markets can stay irrational a lot longer than you can stay solvent. Okay, so here's our gold trade. Came down and sort of kissed us, and we got filled a little bit there. I would be looking to get out of this relatively quickly. Something like that would be my trade. I'm looking for a nice firm hit of that 38% level. Gold right now is up about 1%. We're getting good bullish price action right now. Really a nice move off our 38%. I can't argue with what's happening here. We just need maybe one more tick higher, and it looks like we're going to get it relatively simply. At this juncture, I wouldn't be interested in taking a loss on this trade. Really a strong scalp. We should get paid off right there with that 484 relatively quickly, and I mean, there it is. We should get that. And there's the break, 463, 484. We're right at our take profit. So in this instance, when you're in a trade like this and the thing bounces off, I mean, we hit this thing perfect. If it's up right at our take profit, there's no way you can take a loss on this trade. You cannot do it. So you've got to adjust your stop loss. You've got to put it maybe right up there to break even or somewhere in that area, because you cannot let yourself take a loss when the trade has gone this well. I'm a stickler for that. If you were trading for me and we were at the desk, at the trading desk, you were saying, okay, we hit our entry perfect. We didn't take any draw really. The price goes right up to our take profit and it doesn't hit it and we don't get filled. You've got to go to break even. You cannot ever make a winner a loser. That's the number one rule of trading. Never make a winner a loser. This trade, in my view, is a winner. We bounced right up to 484. The rest of it's semantics. Could we take the money right now? We could. We're going to let this thing go out because I want to talk a little bit about the psychology. You cannot sit on a trade that goes in your favor and then comes back and potentially could knock you out and take a loss. That's called a swing. Your swings have to be as low as possible if you're going to make it in this game over the long term. Think about what could potentially happen. If your trade goes in your favor right up to your profit target, which was 484 in this instance, and let's say I put down a 1-to-1 where I'm going to risk 484 on the downside, and price goes right up there, what we printed like 469. There's no excuse to even still be in this trade, but we're going to let it play. We go right up to our profit target. We don't get filled or something goes wrong. Price reverses against us and maybe trades down to our stop loss level. That's called a swing. That means I don't get paid the money that I should have got paid for my profit target, and then I take a loss. That is a monster swing. That means I don't get my 484 to the top side, and then I lose my 484 to the downside. All of a sudden, I'm looking at a $1,000 swing where I should have at least been able to get out of this thing with a small profit. So right there, we're breaking. I'm not interested in hanging around any longer with this trade. We should have already been filled at our profit target, but we're right there within a few dollars. I mean, I'm just scratching it. We're out. We're taking the money and running. If you're going to scalp, and you're going to scalp intraday levels, and you're going to be a trader that is around for a long time, there's a couple of things you cannot do. Number one, you cannot take big losses on these intraday levels. They are nowhere near as reliable as the long-term levels. That's the first thing. The second thing you have to do is when price bounces up on a buy or it rotates down on a sell, and you have an opportunity to get out with your money, with your pre-designed profit target, and let's say you're just within a few dollars of that like we just were, take it. I mean, I know the people on YouTube are going to say you can't afford to pull out. You can't afford to take those smaller profits. And I said, no. We're scalping. We're looking for small profits repeatedly over the course of a day. All right? That's your first trade of the day. A pretty good win. Look at it this way. It's not even 10:30 in the morning Eastern. We just showed up. The market's essentially at the cash open for about the first 52 minutes. You just got in there and you just hit this thing pretty well. Hit it right on the nose. You have an opportunity to walk away essentially up 500 or sit around and gamble and hope it turns higher and maybe it goes way high for you or maybe it comes down and knocks you out. My point is you're not position trading. On a trade like that, that's not a position. We are scalping. We are in and we are out. And if you stick to those guidelines and you don't take the catastrophic loss and you avoid those big swings and you make sure that you don't make winners losers, you're going to be all right. You're going to be all right. But if you start doing those things that, I'm going to let this one go, It started out as a scalp, and now you're like, I'm going to let it go. I'm going to shoot for the home run, the big home run. Odds are it's not going to work for you. Typically, a scalp is a scalp, and a position trade's a position trade. This is a position trade. Our orb strategy is our position trade. This is what we want to get accomplished for maybe a pure day trade today. We want to get on the right side of a breakout in our equities markets because we've got a setup here that is conducive to us maybe holding for the rest of the day or maybe holding into the close. That's great. I don't have a problem with that. But something like this, a short term, a 30-minute Fibonacci level, we're in, we're out. You can make money either way. It's all about personality and how you want to trade. But for me, getting in this time of day, my psychology, boom, boom. Could we have stayed in there? Yeah. Could we have taken more? Yeah. I genuinely don't care. Put that money in the green, and then now we're rolling on to the next trade. Think about this in realistic terms. Let's say you just hit that as a winner, and now you're rolling over to your US 500 going, okay, I'm up 500 on the day. Now I got a chance. Because if this US 500 trade goes in our favor and breaks out and maybe hits a 1-2 or a 1-3, we get in early on a big trend day up, then we're walking away with a big day. A big day. We may not have to trade the rest of the week. If we're trading with enough money and this US 500 trade was to be a big enough winner, you might not have to trade the rest of the month. So always be thinking about your psychology. Always be thinking about your intra-trade psychology, how you're managing your strategies, and what exactly you want to get accomplished in the markets. For me, this could be the beginning of an absolutely huge day, especially if you string a few winners together and really the sky is the limit. That's how small traders make a lot of money, is they just get it rolling and they get in the green, and next thing you know, those returns start to compound, and you started with $5,000 and you walk away at the end of the year with 50 or 100. I mean, it can happen. All right, T. Marina, good to see you. T, welcome. Let me see. We had a question out of Pack Amp. Is the NAS moving towards the big round number at 30K? Yeah. I mean, the NASDAQ's going to 30K. I mean, if it's not already there, is it already there? US 100, is it about, 28,000? So you're in that position. Yeah. I don't see any way around it. We've broken from 25,000. So 28,000's up next. That's for sure. You're welcome, Tina. And times of uncertainty. Yeah, that's for sure, Eli. Good to see you, Eli. Welcome. Oil is moving and the NQ is dumping. Interesting. We'll take a look at oil markets before I sign off today. But the big market driver there is the Strait of Hormuz. So let's go ahead and dig into some of our fundamentals for today. We've got about another 4 minutes before we execute this orb strategy. So I'll be watching that out of the corner of my eye as we dive into some of our fundies for today. Okay, week 19 today was the RBA interest rate decision, and we had a slew of economic numbers out of the United States. We're not going to dive too deep into them because I don't view them as being very important. News of the day, though, was the RBA interest rate decision. The RBA raised interest rates by a quarter point, 4.35% from 4.1%, and the tone was ominous. Reserve Bank lifts interest rates by another 25 basis points. But they were talking about hard times. The tone was very, very ominous for the RBA last night. Let's see. RBA Governor Michelle Bullock said the rate rises would not stop higher inflation heading Australia's way from the war. She said Australia was staring down the barrel of a very rough time in coming months as inflation rose, the economy slowed, and unemployment slowly picked up. That's stagflation. Low employment, low economic growth, high inflation, that's stagflation. I have a hunch that the United States is headed for a real similar situation. But these interest rate rises are not going to do anything for inflation in the next 6 months. That's done and dusted. Well, there you go. So essentially, the idea is very, very simple here. You're going to see an energy shortage in the Asia-Pacific region. We're already seeing it. That energy shortage is going to drive prices up. Gasoline, diesel. Diesel's the big one. A lot of people complain about gasoline because that's what you typically put in your cars in some areas of the world. That's almost exclusively what we use here in the United States is unleaded gasoline. Well, that's one thing. It's another thing to be looking at your logistics, your trucking industry. All of these different industries are predicated and based on reasonable energy prices. It's always baked into the cake. So when you see energy go up, when you see diesel, especially diesel fuel that's used in your trucking, on-road diesel, it's a big problem because it raises the price of every single thing out there. The supermarket prices will continue to go up because how does food get to supermarkets? It comes in on trucks, and that will be passed on to the consumer at every level. That's why high energy prices are the death nail for any sort of economic growth, explosion, and or recovery. Everybody knows it, and that's why when we're looking at 101.82, crude oil's off 4% today because of the Strait of Hormuz situation, but it's still positioned above 100 and could go to 125 easily. That raises the price of diesel, maybe several fold. So it's an ugly scenario. So that's what we're looking at there with regards to the RBA. We'll look at a few Australian dollar pairs here. I got the Aussie USD queued up, and then also the Great Britain pound Aussie we're going to look at here. But we've got about another minute until we get our orb trade, and it looks like we may get it. So we'll circle back around to that. A ton of economic numbers coming out here in the United States. I don't see many of them as being very important. I always look at building permits. I'm sort of an old construction guy, an old real estate person. So I'm always juiced into the real estate market and what is coming our way. Because when you see a big downturn in real estate or you see construction slow down, that really is the canary in the coal mine for me. When things go bad in real estate, they typically go bad everywhere. Now, I'm watching this closely just because it's an old habit, but you can see these are one-star events. These aren't big. I'm not going to spend any time on the S&P Global Services PMI. That ticked a little bit higher, didn't meet expectations. I don't think anything's really going to blow us away there. Building permits, though, down 11.4%, and that's down big from last month. You can see that for February, you're up. For March, you're down, and so the chart sort of looks like this. What was key about this was it was the lowest level, when you actually read the release, it was the lowest level since August of 2025, which is sort of suggests that there's a bit of a lull in the spring months for construction. Okay, here we go. We're going to go ahead and we're going to go buy. We're looking at a market order for our buy here in the US 500. And as soon as we get our close, okay, there's our orb. So we sent it. Will be filled at some point. TradingView typically runs a little bit slow on these fills. But essentially, we are long. Okay, that right there, that's not a very good fill. So we're long from right here. This is where you want to be long, right? As soon as this bar closes up above our range. Okay, so now we have a couple of options, a couple of things we can do to build this trade for the rest of the day. So you could put your stop loss beneath the signal bar, or you could put it beneath the range. In this instance, I think the range is tight enough where I would put it beneath the range. So if I'm looking at my stop loss, I'm putting it right down in here somewhere. Remember, you're not going to put it right on the very bottom of this range. You don't want that. You want to put it down there a few ticks. Even if, depending on your size, put it down there. Give yourself an opportunity maybe not to get faked out by 1 or 2 pips, something like that. 236 is where we've got our stop loss. Where's the bottom of that? 237.5. I don't have a problem with that, really. It's a little bit extra money, but you'll find over time that can really help you stay away from maybe getting faked out, stopped out by a pip, and then a big rally. So the question now, and remember, this leverage is all theoretical. This is, you got to trade within your means, 1 to 3% of your account on any given trade. But what we have here is a big trade. I mean, my size is big, and it's because it's on a demo. I think this demo account's got like $4 or $5 million in it. So is that a legitimate trade? It's a legitimate trade if you have 100,000. I would say 100,000 in your trading account, maybe 200,000. That's what these guys trade. The folks that are making the big money, they're putting five grand on the line in a given day, 10 grand on the line. That's just sort of the game. This right here is where our stop loss should be. That's your first step. Now, the take profit is one of those that is intuitive. You can interpret it any way you want. You can put this anywhere you want. I always start with a base 1-to-1 ratio. That's what I start at. Now, for an orb, an opening range breakout, sometimes that's not good enough. If we're looking for a true day trade and we want to say, okay, is there a big move involved here? First thing I'm looking at is key levels. What is this? It's going to be the first of May's high. That's May Day. That's the high right there, right up there at about 72, 75, somewhere in that zone, 72, 72. That's sort of the top of market structure, and that is an all-time high. So does this do us any good here to build a 1-to-1 trade with our orb today and have my profit target slightly above the all-time high? I'm betting that there's going to be new all-time highs. All right, well, the thing of it is there is a it looks like a liquidity sweep here in sort of a supply zone. A lot of sellers stepped up to the plate. What is the top there? 272. All right, so 72, 75, probably a big level. They protected that. Is it worth my time to shoot for a 1-to-1 with my profit target right above an all-time high? No. Odds are we're going to run into trouble up there, realistically. So here's what I would be doing. I would at least have a 1.5 to 1, maybe a 1 to 2, something like this, potentially, that would fill us in for the rest of the session. That would be the trade. So we're looking at about 72.97. We're looking for that all-time high to get broken and then rally a little bit above it. I believe that if this all-time high right here, this 72.72 zone gets hit, I believe it's the all-time high. It looks like last week's high. If, in fact, that gets hit and taken out, and then we could really be looking at this rally up in here, more than likely, I would view it as being probable. Now, we have some market drivers out there today that can take us there. But right now, you can see the market's drawing against us. We could get stopped out. We could easily get stopped out. And if we do, the thing about the orb is you take it once. Once this thing sets up and we get in there and we get our shot, we call our shot with our confirmation, right there's your orb strategy, boom, boom. There's your close outside of the range. It's done. The day's done. We are playing a bullish break. It's with the trend. It's with the macro trend. We're continuing April's trend. We're looking for new all-time highs and then some here. Essentially, that would be the trade on a 1 to 2. That's the orb. You only take it once in a day, though. If it misses, if it loses, comes down and knocks us out, you're done. You don't get back in there. You don't start looking for secondary or tertiary entries. You don't do it. You don't do it. Why? Because if we get this break and we rotate back down, it means that more than likely we aren't going to be in for a trend day or a breakout day. We're going to be more along the lines of a flat day. And the problem with that is if the market just goes sideways, okay, we're long, and then let's say we take a short and then we take another long. If this market turns into that barcode formation where it's really choppy, then you're just going to take multiple losses, and you just cannot do that. You can't do that when you're talking orb. So orb is a one-off. We take it once. We see what happens. We've got our position dialed in, and now we're just going to let it roll and see what happens. We could get knocked out in the next 2 minutes. We could watch this thing trade profitably for the next 4 hours. It's done. No sense meddling with it. It's done and over with. All right, let's see. We've got a lot. I got way behind in the live chat here out in YouTube land. Let me see. Lewis, if my scalp takes off, then I will trail a stop loss from my 1 to 1. That's not a bad idea. We had a trader, a mentor here several years ago when I first started with how to trade, and that was his strategy. He would wait for the move to go 1 to 1, and then the stop loss would move to break even, and then the idea was to catch a runner based on market structure. I don't hate that. And it's actually not a bad idea to do something like that with an orb. If you want an opportunity to go for the big money, those big 1 to 2s, 1 to 3s, 1 to 4 trades, and you wait for it to go 1 to 1 and then move to break even, I don't hate that idea. I just don't know if it's more profitable than just taking the 1 to 1s. You might find yourself hitting 1 to 1 ratios 60 or 70% of the time and only hitting your 1 to 2s or 1 to 3s 30%. Theoretically, both are possible, but that 1 to 1 gives you a much stronger cash flow. So that's sort of up to you guys, whatever you want to do with it. I don't mind that strategy though, Lewis. I think it's pretty strong rationale. It makes sure that you never turn a winner into a loser, and that's big with me. Let me see. Pack up, YouTube bros. Look up and down. Let me see. Look down upon taking short scalps, but I saw someone make $1 million plus just taking small tick profits. Well, I mean, it is. That's sort of the secret, Pack Camp. A lot of people don't believe it. A lot of people deal with the variance and the variability of the markets, the unpredictability, by always putting out 10 to 1 payoffs and 15 to 1s. Well, this is a 10x or this is a 15x or this is a 5x. And the reason why they do that is because they don't win very often. But when they do win, it's such a big chunk of money that a lot of folks really gravitate towards that type of trading. I call it just playing roulette, or that's that slot machine mentality where you're like, okay, I'm going to take this trade, and if I win, if the slot machine, if the reels line up, then I'm going to make a lot of money. And I don't hate that way of thinking. I really don't. I mean, I've been known to play a slot machine or two. But for me, if I'm in the markets every single day and I'm dedicating a decent portion of my life to this discipline, I want to see the money coming in regularly. That's what I want to see. I'm not interested in sitting on my hands and taking losses for 2 or 3 months waiting for my 10 or my 100x to come in. I'm not interested in that. Remember, consecutive losses are what bury you in this game. And if you take enough consecutive losses, you don't have any money left. You don't have any money left, that's for sure. Let me see. T. Marina, the U.S. will follow suit behind Australia. I don't think so. I don't think the new Fed chair, Kevin Warsh, is going to go in there and raise interest rates. I really don't. I don't know if you guys saw the meme out. The White House posted a meme of Powell being thrown into the dumpster. Let me see if I can find it real fast. Yeah, I mean, this was the meme out earlier today. This came from the White House. This was on the White House. I think it was on its Twitter, Trump's Twitter. I mean, this is it. Jerome Powell. Right here, the White House. Too late, Powell. Too late is a disaster for the American. Interest rates are too high. So there you go. They're throwing Jerome Powell in the dumpster. I can't say that I've ever seen one of those. So I don't believe you're going to get the rate hikes, T. I sort of disagree there, but I think it's irresponsible to cut interest rates right now. The oil shock's going to do wonders. I mean, it really will drive prices to anything. Lewis, I think we're about to see the worst economic disaster in history. A lot of people are talking about it. I heard a guy yesterday that said we're headed for a famine, a global famine we haven't seen in like 1,000 years. I don't know about that. I don't know about any of that. But what people are really worried about isn't necessarily the oil prices. It's the fertilizer, and it's a potential food shortage. Food shortages are absolutely catastrophic. They're catastrophic, specifically for third world, developing nations. Any global food shortage is catastrophic. So I hope we don't see that. And hopes for losers and children. So let's not see that. Let's figure a way to make sure the food keeps flowing. That's a bad one. Let's see. Team Marina, all right, we got a lot of bears in there. You guys think we're going to see the big catastrophe? I think we're headed for stagflation. I think we're already there. I really do. Absolutely, T, stagflation. The plan to print more money, 512 Eli, the plan to print more money using the new 401k standard starting in 2027. Always remember this. No matter what you think of Trump or what you think of the administration, Trump was a real estate developer. And the number one rule of being a real estate developer is make sure you always have liquidity. As long as there's loan money coming in and there's lines of credit coming in, then that real estate, that business can always go. There's always money to build something new. And as long as you're building something new, there's money coming in. They're going to try to run the country like this. And they've been doing it for a long time. By they, I mean the politicians, the people, the powers that be have been kicking the can down the road forever. And Trump is not above that. They will cut interest rates and they will pump the money into the economy and live with inflation, sort of in the name of promoting growth. No question about it. They'll do it. Will it work? Eventually, you run out of confidence. The dollar gets devalued so much, you just run out of confidence in the currency and the financial system. But they've been saying that the big crash is coming most of my life. So, and I remember out of college being a graduate with a degree in business finance. That was the talk. It was 9/11 and the wars in Iraq and Afghanistan going to bankrupt the country. And everybody was worried about it then, and it never happened. They found a way to kick the can down the table 25 years. So I think they could probably do it again. But rest assured, at some point, someday, the old saying, the chickens will come home to roost, and they're going to have to deal with some of these liquidity issues because the next big crunch, like 2008, is going to be the one probably to end all downturns. It'll be a complete reset. It'll break everybody out. So, yeah, this will pump stocks. Absolutely, Eli. More money pumps stocks every time. All right, here's our US 500 orb sort of hanging in there. I'm going to circle back around to that one here in a few minutes. Not really much happening. I don't mind the market structure, though. We tested our range and bounced up. We'll see. We'll see what happens. Australian dollar, US dollar, we sort of just talked about what they did with the Aussie. This is sort of what I would call a weak trade. It's not a great wave. Spike low, sort of to the top this month. 70, 75, not bad. About 100 pips down. Maybe that's a potential support zone or a bid. Let's step back to a weekly potentially. That's really what you're working with. It's not great market dynamics. I mean, it's really flat, really tight there at the end of April. Then you sort of broke a little bit. Now we're rotating off of that top. It just isn't good. I mean, it really, to me, do I want to buy? Yeah, probably. I would buy on a big pullback. So if we get the pullback down there to 70, 75-ish, it's not a bad, but that's a scalp. You're looking for 20 pips there. The range is very tight. There just isn't a tremendous amount there to hang our hats on for a big winner. So I'm looking at a scalp there in that Aussie USD. I wouldn't really go any further than that with the analytics. Great Britain pound, Australian dollar, really the same type of thing. The weekly chart is not the best market structure. Sort of a weekly double bottom here, and then you got this big liquidity, this bullish sweep that came into play right off of that low, right at 186.94. So definitely have 187 on your chart. I think you probably would pay to be a bidder down here, somewhere right around 187-ish, maybe 187.09, not bad. If you do get this retracement, though, sort of up into these negative candles, maybe something like this. Maybe a 190 and a quarter, 190.25 in this pound Aussie may not be a bad trade as well. CAD yen, we talked about this one in sort of the week ahead. If you guys haven't seen that video, it's over on Switch Markets on YouTube. Go ahead and check it out. What do you have here? Really, you have a resistance zone that's coming our way. Daily chart setting up beautifully. Nice big move last Thursday. Compression, break. And now you're looking at 62% right up there, right around 116. We're printing 115.92, so my entry would be probably somewhere in the neighborhood of 116.09, maybe 116.10 if I want to be real conservative and wait for an exact entry. We'll wait and see what develops there. Euro, Great Britain pound. This is another really popular one right here. I covered this one in the week ahead as well, or the weekly market analysis. Switch on hot picks. This double bottom on the monthly, be careful with that one. The low is 86.12. The low there's 86.11. If you do break beneath that 86.11 zone, I would definitely be watching 86 flat closely. That's a double bottom, and if it comes off big, you're already sort of right at that 38% level. If you lose a hold here and go low, you're not just going a little bit lower, you're going a lot lower. The next port of call would be 85.50, somewhere in that zone, and then maybe 85 even, 84. Back into this golden zone is probably would be the next area I'd be looking to go long. This wasn't a bad trade, though. You did have an opportunity to bid right at 27, and you rotated up there to about 86.48. So you can see very tight between 86 and a quarter and 86.50. Excuse me. We've got the trees are popping. Everything's blooming here in Montana, so a little bit of allergies. Really tight in that area, though, 86.50 and 86.25. And now we're rotating down. I don't know. I think if I was holding longs, I would be skeptical right now. But if the price rotates down and you get knocked out at 86, you got to get out. Okay, a couple things to cover here on the news front, and then we're going to go ahead and call it a wrap. We've got the top story today. U.S. attempt to open Strait of Hormuz tests Iran war's fragile ceasefire. Iran ceasefire holding for now, Hegseth says, after Iran attacks UAE ships in the Strait of Hormuz. Yesterday, there was all sorts of kinetic exchanges. Iran shot some missiles and drones at the UAE, not necessarily the best thing you want to see during a ceasefire. But what we did see happen was the United States retaliated a bit, sunk about 7 so-called fast boats. They did it with helicopters in the Strait. So for right now, cooler heads sort of are prevailing. That could have easily went to an all-out war. It did not. If I was a betting man, I think the ceasefire is tenuous at best. I don't know that I would be betting on that thing to last much more than another week or so. It looks to me like things are getting ready to kick off again in that region. So we've got to be smart about what we do. For right now, that's a bullish market driver facing stocks, but we're watching our US 500 sort of rotate back down into our range. That's why we have stop losses. That's why we allocate our risk appropriately. If things don't develop quickly, if it takes a while for us to get our bump, it does. And if we get stopped out, we get stopped out. That's the way it is. The beauty of it is it's not that big of a trade. So if you get hit, you get hit. That's the 15-minute orb. We'll look at the 15 and the 30-minute orb on Thursday with our tutorial. But that trade, the jury's still out, taking a bit of a draw. We're about, I'd say, halfway into our stop loss. We'll wait and see what happens, though. The bidders are stepping up in that orb zone, and that's a good thing. We'll wait. Need to get a break, though. And that 1 to 2 risk versus reward, man, there's only, I would say, 5 hours left of trade. And you definitely, one thing about the orb is you probably don't want to be in it 10 minutes ahead of the market close. All right, everybody, I'm going to go ahead and sign off for right this minute. I want to thank you for joining me. Definitely a lot of fun trading this time of day. If you guys like this time of day, just let me know. Drop me a message over there at How to Trade. I'm more than happy to sort of shift our schedule at least a few times a week to focus on this U.S. Open. We did fairly well today thus far. The gold scalp was beautiful. You can typically do things like that every day, either in gold or oil. We didn't get to oil again. I wouldn't worry too much about it. You're right around 102, 102.25. very much in a holding pattern until the Strait of Hormuz situation gets ironed out. And we're sort of seeing stocks taking it on the nose a little bit since we got in. We just got to wait and see how this day develops. Tentatively bullish right now. The reversal, is the reversal on just yet? I don't know. The jury's still out. Let's just wait. Give it a shot. All right, everybody, I want to thank you for joining me today. And as always, trade the action well, and we'll talk soon. See you.
Already trading with another broker? Fair enough.
If you're not already
but if you haven't looked around lately, you might be missing out.
Live there
now,
every day trading the markets, covering world news,
offering tools most brokers don't, and their support actually shows up.
Don't miss the
it might be time for you to switch to Switch Markets. Click the link in the description below to get started today.